Hans, you're bullish, dude. You're kind of friendly. You're kind of friendly towards stocks, are you not? And you don't like emerging markets as much currently. Why?
Yeah, that's right. That's right. Well, I think given the strength of the dollar, which has been remarkable even in the light of falling interest rates, the better bet is in developed markets, and the first place is the U.S. Joe, you're right. It's a bit of a sea change for me, and I think it reflects sort of the investing equivalent to the realpolitik, which is, you're dealing with the circumstances in front of you versus from any ideological standpoint, whether it be valuation or the like.
Hank, when you look everywhere, I think you sort of, if you try to factor in all the different variables and everything else, there's a couple of key things. Trade and interest rates is it, and both of them could be trending in a pretty good direction. Sustained low rates with the ECB and other central bankers easing. Maybe we don't go as far, Hank, but and then you've got maybe some signals that trade gets settled one way or another.
Yeah, I mean, look, it's a perfect setup politically. Trump is getting several rate cuts, so the interest rate environment has improved. And now he can come to a trade agreement. The details really don't matter. What really matters is that this subject gets taken off the table and certainty replaces uncertainty. And that will allow business confidence in 2020 to pick up. And you have the potential for an economy to start to accelerate in 2020, which sets up perfectly for the fall presidential election.
Kind of interesting the way you say it too, and it makes me feel kind of dirty. You know what I mean? For investors, it's like, you know what? Let's get this trade. So it doesn't matter whether we do anything with China. Doesn't matter whether we get anything. Let's get it done so the market goes up, and let China, take over the world in 2025. I mean, wouldn't it make more sense for us to say let's hold out and actually accomplish something instead of just hoping for the S&P that we make some half-measure deal?
Well, that's the other viewpoint, is Trump sees this China conflict as beneficial to his campaign because
that's cynical,
he is
Hank.
acting.
What about trying to do what's right for the United States and for our citizens in terms of global competition in the future? Is that totally wrong? That we should let them steal stuff and not have a fair playing field?
Well, Joe, strictly from an economic standpoint, what is best for the United States is no tariffs. And this economy, if we eliminated all tariffs, this economy would be much stronger because the consumer would be better off.
Those are short-term versus long-term, though, things, too, Hank. I don't know. I'm just, if you look at the hawkish viewpoint on China, I'm just pushing on that just because that viewpoint is out there. I'm not really, I want us to do well economically. I want GDP to go back up, unemployment to stay. I want all those things, too, and the trade war is an impediment to that. But the case can be made that this might be the time that you address some of this stuff. What do you think, Hans? We got to go, but anything to that, or you just want the tariffs off?
Well, it'd be great to have the tariffs off, but I don't think we're going to make any durable or significant improvements on this trade conflict. This is sort of falling into sort of the Cold War equivalent with trade.